Bitcoin and the crypto markets are crashing. Today, we're going to be diving into what is causing all of this mayhem. You don't want to miss it. My name is Paul Barron. Welcome back into Tech Path. Let's get into it. Do want to thank our sponsor today, and that is iTrust Capital. If one thing, and you want to look at holding crypto for a longer period of time, kind of going out of the market, getting away from this craziness, get into iTrust Capital. All you have to do is jump over to itrustcapital.com. You can do everything you can in an exchange, but guess what? It's happening inside an IRA, and that is one of the best tax havens out there. Always seek tax advice for that. But if you open an account with us, with iTrust, and use our link, you're going to get $100 in funding as a reward to get started. So check it out. Use the link down below to get started. Let's go over to a couple of points I want to lead off with here. Is this the post-election rally over? Some people are saying, is this it? Is the market over? Is the potential for us seeing a true four-year cycle gone? The S&P is now trading below November 5th levels. That's the big attestment here, and it's erased almost $2.5 trillion of market cap in 4 weeks. So a pretty big pressure cooker right now. What does this mean? We're going to break it all down for you. A couple other tweets I want to kind of flow in on. This is one from Eric Balchunas talking about ETFs, but he's saying this the whole time, is that the biggest risk to Bitcoin is stocks or boomer markets going down. This is the price you pay for being hot sauce in terms of the asset class when it comes to ETFs. But the good news is Trump will probably bend over backwards to kind of keep the stock market up. So I would agree with that to a certain extent. The other thing is Trump is going to put pressure to continue to reduce rates. That's the other thing. We have FOMC coming in at the end of this month, which a lot of people are calling for a flat. If that comes in as a flat or a no raise, or a no decline in interest, that could be another factor. And of course, Trump will be in office by then. So we'll probably see a lot of activity. If you look at the market right now, this is the traditional S&P. Fear and greed is literally teetering on extreme fear. It's the first time we've seen this in a long time. The other thing is, if you look at the crypto markets, this time last month, we were on extreme greed at 83. Look at where we are right now. Hovering around 61, we could be dropping into fear very quickly, even within the Bitcoin and crypto markets. Other factors to compare this to is, where is Bitcoin going to be? Well, some analysts are saying 69K is in the cards. And if you look at a couple of points within the article here, I want to hit on a few of these. Long anticipated by market observers to move. Obviously, many took daily losses, nearly 5%, liquidated more than $500 million in crypto long positions. A combination of market nervousness, surging dollar strength, all of this ahead of the inauguration is all potentially saying, oh, well, maybe this is the priced in lull right before the storm. That's what people are kind of hoping for. Bitcoin has a strong technical support around 86. We'll see if it blasts through that. This is the area, the sub 90, that I've been talking about for a little bit, is being concerned about if we do see a sub 90. Where is the next stop? Secondary support says it's at around 76K. So we are going to have some traders later in the week to kind of break this down for you. Hopefully we'll see a little different action as we get going in on it. Now, part of this is still the narrative coming out of Wall Street. One of the big narratives on Bitcoin, and has always been this, is Jamie Dimon. Let me go to his clip.
Said that it's as useless as a pet rock. What do you really think?
You're going to have some kind of digital currency at one point. So I'm not against crypto. You know, Bitcoin itself has no intrinsic value. It's used heavily by sex traffickers, money launderers, ransomware. So I just don't feel great about Bitcoin. I applaud your ability to want to buy or sell it. Just like I think you have the right to smoke, but I don't think you should smoke.
All right, so he's been in that camp for quite some time. I think he had softened his position slightly. Metal Lawman kind of hits it up right here. I never understood Damon Dimon's Bitcoin Ponzi scheme take. Imagine a Ponzi scheme like Bernie Madoff had put all his transactions on a public blockchain for everybody to see. Well, there wouldn't have been a Ponzi scheme at that point. So it would have been instantly opposed. So what's fascinating is Jamie Dimon knows how these Ponzi schemes work. So far, I wonder why he would keep calling Bitcoin a Ponzi scheme. So that's something that, of course, Metal Lawman, an SEC trained attorney, understands where this is going. I want to go into another clip, and this is Tom Lee. He gets into a little bit more detail of where the market is going. And this is kind of a two-sided clip, so take a look.
So we got inflation this week. There are concerns. I tie a lot of the weakness in the market to that. Are these important numbers?
It's important because, as you know, we've been correcting now for almost a month, right? 23 trading days, and this Wednesday is an important day because it is a possible turning point for markets. And I would like to see CPI come in below, 0.25 or so, and I think that would give that jolt of confidence for markets. On top of, I think, earnings, which is going to be a positive catalyst, but for investors in the near term, I think they got to ride out the volatility because I think yields here have made people nervous.
What does the movement in Bitcoin say to you? So we're at 91,000. What is that? What is that a signal or a sign of anything in this sort of analysis?
Stupid Fed.
Yeah.
It's not cutting.
Yeah, Bitcoin's down roughly 15% from its highs, which for a hyper-volatile asset is a pretty normal correction, and it is slightly following global liquidity, but we're pretty early in this halving cycle. So to me, I think Bitcoin in the near term, again, our technician thinks 70,000 is where we can sort of make a stand. Means you're getting a big opportunity because I think Bitcoin's going to be one of the best performing assets.
All right, so as you can see, the pressure on the market is mounting in a big way. And I would say this, guys, is that Wednesday this week, we get the CPI numbers that Lee was representing there. This could possibly be the biggest day of trading that we've seen maybe as far back as 6 months ago when the Fed really was starting to be in the heyday of cutting. And I also think that we are probably not going to see as many cuts, if any, in 2025. That will put some pressure on the dollar if we do see the dollar start to dip, which I think is really a narrative that Trump needs, is the dollar to weaken slightly because of the opportunity, in many of the other asset classes, including securities like the stock market. That's the big factor that plays out on this. All of that being said, you still have another major issue that's happening this week and next, and that is TikTok's ban. This could really happen. This is only 5 days away. And of course, Frank McCourt, Kevin O'Leary making a heavy charge into Trump land to try to get this positioned up as a transition of divesting TikTok to a U.S. company. That U.S. company also tied to a potential blockchain project on Polkadot. All that is playing into the market. The other thing that's playing into the market right now is Bitcoin continues to get purchased by Microstrategy, and now they're grabbing up more, now surpassing 450,000 Bitcoin overall. And if you look at that in comparison, I think they're just not slowing down in terms of acquisition of Bitcoin, and it didn't even move the market. In fact, it barely made a dent. So I wonder if we are at a point where the market is more concerned about macro rather than the narratives that are being painted out there within the market overall. Let me know what you guys think. By the way, if you're not subscribed to the channel, make sure and do that right now. I want to get your opinions on, do you think that the market is going to continue to push downward like what Lee is representing? Or do you think this is just a short period of a lull in January that we've seen before in these 4-year cycles? Let me know with comments down below. Other thing to watch right now is the U.S. dollar. The Dixie is now surpassing the 110 level for the first time since November 2022. This will have an effect on Bitcoin, gold, other commodities out there. Other things that play around this, U.S. dollar peaked right around Trump's first inauguration. We saw that. And of course, we saw the adjustment off of that. Of course, that was a different time. And then, of course, you have to look at this right here, and that is the U.S. Treasury Secretary. This is Scott Bessent. He's coming in. This will be replacement of Janet Yellen. Owns about 500,000 worth of Bitcoin. Not that much, but in reality, because this guy's close to a billionaire, I believe. But the interesting thing is the fact that he does own it. And I think that is still a value. I still believe we're probably going to see some attack on the valuation of gold to try to, because remember that Bessent is going after his three-pronged attack on trying to adjust the economic condition of the United States. So a lot to be watching what the new incoming Treasury Secretary Treasury comes in and what he's going to be doing. I want to go to another clip real quick because this is the dollar versus technology. Take a look.
The rise in the dollar. I'm looking at a 1-week chart of the dollar. It's up about 1.5%. These are tremendous moves when it comes to a currency. We did get a spike after the jobs report, but still, it was still moving higher last week overall. But we have seen a lot of weakness in tech, Dan. Let's just be fair. Tech has to be the engine moving it forward. So if we go to the next Fed meeting coming up later this month and the Fed continues to be hawkish, you see that continuing to impact the tech trade? Because that seems to be the inflection point, even for the tech trade, even though we call these stocks defensive just because of their bulletproof, cash holdings and everything else.
Yeah, look, and that's also why you have a diversified view in terms of whether it's an Oracle, whether it's Microsoft, and some of the more high growth names like a Palantir, a Tesla, and others. Look, it's going to be a headwind, but our playbook the last few years has been you use these opportunities to own the winners. And that's why I get the bears are going to come out. Right now, the bond market, the 10-year is going to ultimately dominate. But we're only halfway through tech bull market. And that's why I still believe tech stocks are up 25% this year. We look back at this as an opportunity, not time to hit the elevator and ultimately hit the exit.
All right, so as you can see from that clip, they were really kind of in a bit of a disarray as to how this is going to truly play out. Kobayashi kind of hits on this. U.S. tech stocks performing at almost 2x, ratio doubled over the last 5 years. And if you look at this compared to the 2008 financial crisis, U.S. tech stocks still outperformed its global peers by almost 5x. So very interesting times ahead as we start to play into the market with the strength of AI, with the strength of the potential of digital assets playing into the market. I still think technology is going to break out and be one of the big stories for the year. With that being the case, you've got Donald Trump Jr. coming in. He's taking a role advising the prediction market, Kalshi. Remember, Kalshi is the competitor to Polymarket, so the U.S. competitor to Polymarket. So very interesting that we have Trump Jr. stepping into this to assess how this is going to assess or impact politics and elections. Remember, midterms are going to be a big part of this coming in just 18 months away as we start to see things line up for the next election. One other thing to look at while market meltdown is happening is XRP. XRP has been able to hold, and of course it's broken a new pattern here, so it's definitely in a new discovery zone. We're going to be watching XRP very closely. We will get another video out to you guys this week as well. Other things to look at if you think about XRP is where does it line up right now on market cap? Well, if you look at ETH and XRP, if it continues at a pace that compares to Ethereum, when you look at the trade on, this is the ETH, this is the monthly chart on ETH XRP. That is the difference in the performance between these two assets. Could we see XRP actually become the #2 token? That's a big question for everybody. Last up, of course, I want to hit on is analysts is looking at XRP looking excellent as it predicts another rally for the large cap. And I think there's a couple of points within here, maybe ready to spark a little bit of a step up. And again, very bullish compared to its last time that it started back in November. Every time I start doubting whether it's going to blow off top or crypto, I look to the XRP chart and then everybody says, yeah, don't worry about it. We're getting ready. Just set up. And the market is still in play. Let me know what you guys think. Drop some comments down below. Do you think this is it for this bull run? Or do you believe that it's just getting started? Drop a comment. If you're not subscribed to the channel, do that as well. And also jump into the Diamond Circle. Follow me out there on X, @PaulBaron. We'll catch you next time right here on TechPath.